Well, good morning. It's January 30th, 2021. We've been going over our strategies on the live webinar every Tuesday. One of the strategies we're employing, we talked about last Tuesday, was the zero coupon rental. That's a play on words on a zero coupon bond, which doesn't receive revenue. The interest is imputed. So the bond goes up in value, but you receive no income from it. And that's what a zero coupon rental would do. Oftentimes, in great marketplaces, the value of the properties are too expensive and you're not going to get enough rent with which to justify buying them because we're very sensitive to cash flow. But once in a while, we want to break that cash flow rules. If we find a very compelling property, and oftentimes when we're dealing in the high end, we get a really nice property, but it's too expensive to really be realistically think that we're going to break the property even or even get a cash flow above all the costs. But it's a compelling investment. So here in a lot of the markets, here in Scottsdale, we have some very expensive properties. So maybe you're looking at a $5 million property. The seller wants to sell it. As they go up in price, oftentimes people want to build their own mansion and they sell theirs at a discount because as you go up in price, there's fewer and fewer people can afford it. Oftentimes we get a pretty good value on some of these properties. Maybe you're looking at a $5 million property that you can buy for $3.5 million. That's very compelling. However, the cost on the monthly basis is a lot more than what we can get on rent. So why would you do this? Well, if you're a multi-property owner and you have lots of income coming in from other properties, the other properties can carry it. Maybe this is a property that if we enjoy rental increases over the next 4 or 5 years, that we can bring it from a negative to a positive cash flow, and we're willing to wait the time because it's a compelling investment. Or there's lots of situations, if you're a high net individual, we can help you with your taxes. Now the new taxes say that you can only deduct $10,000 a year for real estate taxes on your personal returns. You're also limited on the interest up to $750,000 in mortgage. However, those rules don't apply if it's a rental status. So maybe you find your dream home that you're going to retire in 5 or 10 years, and you want to turn it into a rental, and all of that cost becomes a deduction for you. If you have $50,000 a year in interest, you can deduct that whole amount. Maybe you get $30,000 in premium from the tenant. That extra $20,000 in delta that's a negative for you becomes a tax deduction, and Uncle Sam pays a big portion of that. Also, keep in mind that rentals, we have 5 ways to make money. Cash flow is only one of them. So you get depreciation, you get deductions, you get principal reduction, and of course you get appreciation, and these markets are appreciating like mad. So one of the reasons that you would break the cash flow rules is that we're in a different phase of the cycle, and we are in the accumulation phase, which is a little more of an aggressive phase because we're going to get the run up to the explosive phase. So here's a property that we think is going to be very good. It's going to get great capital gains. It just doesn't cash flow. Now, based on consultation, we always want to make sure that this is something that's going to work. So this is just one of the strategies. We want to make sure that this works for you or your client and that you fully understand what the strategy is going to be. Now, we're discussing these strategies every Tuesday. Next week, we're going to be talking about fix and flips. Everybody loves fix and flips. I like them because I often call them fix and keeps. We buy these distressed properties and they're so wonderful, we just keep them. Now, if you would like to be involved with us or you'd like to discuss a property or perhaps a certain situation that you're thinking of, you want to do a little forward planning, You're welcome to reach me at michael@michaeldouville.com. You're welcome to call me at my corporate office, 602-942-1400. And if I can do anything for you, we're more than happy to talk to your spouse, your financial planner, and we suggest you talk to your financial planner. Get them involved. We're here for you if we can help in any way. My very best to you. Bye-bye now.